Guys, this is S&P 500 weekly technical analysis for the week of March 31st. As per the movement that was seen recently in the entire market, especially in the last week, these three things can be confirmed. Number one, Nasdaq is in the recession. This is the weekly chart of Nasdaq. And last week I mentioned that if there comes a red candle, in that case there will be a confirmed crossover in the moving averages, and this will happen after 27 months or 2 years and 3 months after January 2023. So now there is a confirmed crossover in the moving averages on the weekly chart of Nasdaq, and from the peak Nasdaq has already lost approx 15%. Number 2, S&P 500 has entered into the second bearish leg. What was the first bearish leg? This was the first bearish leg. Then retrace. Now the second bearish leg. How much it can lose in the second bearish leg? Approx 10%. Number 3, recession is here. Again, the same reason. Nasdaq has given an early indication or an early confirmation that the recession is here. And if all goes well, and if there comes one more good red candle, and chances are good that there may come a good red candle, weekly candle in the next week, then S&P 500 and Dow Jones are also expected to get a bearish crossover in the moving averages on the weekly chart that will further confirm this scenario, the recession scenario. Now I am going to discuss each and everything in detail, including the numbers, the technical movement in the coming week, the fall, and the limited bullish retrace, each and everything in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now before I discuss the agenda of this S&P 500 weekly technical analysis, let me give you a quick recap of what was anticipated to happen in the S&P 500 and in the entire market through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. Now on Monday there was a gap up open, a heavy gap up open, and the S&P 500 was seen in open equal to low condition. It moved up and it made a high at 5775. Now this was my midday update to my Patreon community members, and here in this the midday update after looking into the movement in the initial hours, in initial 2 or 3 hours, okay, and everything, I mentioned that now for the rest of the day the SP500 is expected to trade in between the open price that was 5718 and the 577x that was my resistance level. And here you can see S&P 500 made a maximum of 5775. Now because there were heavy bullish conditions on Monday, that is why I mentioned this was the midday update on Tuesday to my Patreon community members. Here I have clearly mentioned that the movement to 5826 might not happen now because when it will try to move up beyond 579x, then there will be very heavy resistance. That is why the 579x is very heavy, and we can anticipate that the bullish movement will be restricted to or around 579x. So on Tuesday the high was 5787 and the low was 5760. Now Wednesday onwards, market, the S&P 500 started to show signs of weakness, and until Wednesday in the first 2 or 3 hours, S&P 500 on the weekly chart was seen in open equal to low condition. As long as it is trading in the open equal to low condition means it will trade only bullish. But once there comes a breach of 5718, in that case here I mentioned what will happen when or if the SP 500 loses the 5718, even if there comes a breach. In that case, the 5500 will come into the picture near future or in next few days. Then came Thursday, and on Thursday S&P 500 closed at 5693. The low was 5670 because 5670 was the trend line level on Thursday. This means that any fall or the bearish side will remain limited to the trend line level 5670. So until Thursday, everything was good and the market was recoverable. There were chances that it can recover, it can try to trade bullish. But there was one condition. What was that condition? That condition was that there must not come a bearish breakout, because if there comes a bearish breakout on Friday, then there will not be any more recovery. The market will come down, the entire market will come down, there will be heavy fall, it will be moving to 5500 in next few days. Now here in this, the pre-market analysis before the open of the stock market yesterday on Friday, I mentioned that because the SP500 is expected to open below 5685. What was 5685? The 5685 was the trend line level, and also below the calculated level that was also in the 568x. This is why immediately after open there will be a very heavy pressure from the small zone which is created by the 5685 and my calculated 568x, and that will restrict the bullish side entry. Okay, so bullish side was over, confirm. Now if the situation doesn't improve within first hour and the SP500 opens below this, the zone which is created by the 5685 and my level which is in the 568x, then it will be considered as bearish breakout in the bearish trend. So guys, in this manner, through these daily precise updates, I have helped my Patreon community members to trade confidently and comfortably every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, through these the updates. So guys, if you also want to get these daily precise updates which I give to my Patreon community members, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like to appreciate. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. Now here, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now on the weekly chart, just one more red candle and then the S&P 500, Dow Jones, Nasdaq or the entire market will technically and officially will enter into the recession. Okay, although it has already there into the recession because of the Nasdaq, as the Nasdaq is an early indicator to what happens in the entire stock market. Okay, whether it will go bullish or bearish, it is generally, or it can be seen through the Nasdaq. It is an early indicator. The second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, clearly it has entered into the second leg because there was a bearish breakout on Friday. And because of this bearish breakout and heavy red candle, a gap down open is anticipated on Monday, or irrespective of any open, an initial or intraday bearish movement on Monday. Okay, I will show you the charts, I will show you the technicals, okay, here on the daily chart. Third and the last point of the agenda is the probable movement of the SP500 from March 31st, which is Monday, through April 4th, that will be Friday. So what is going to happen in the entire market in the next week? Whether it can get any bullish retrace or if it will continue its bearish fall. What will trigger this, the bullish retrace? What will help the S&P 500 to continue its second bearish leg, okay, fall? Where exactly the S&P 500 will show reluctance to come down, and then there will be chances for some more bullish retrace, etc., etc. All of that, the probable movement that I will discuss in the third and the last point of the agenda. And guys, let me remind you once again, all of these three sections are interrelated, are interconnected. This means that when I say the probable movement in the third point of the agenda, so by the time I discussed the third point of the agenda. I have already discussed some of the probable movement, like 30% to 40% of the probable movement in the first and the second point of the agenda. This is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the entire US stock market in the next week. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now let's first discuss the candle. Now if you notice, it's a very heavy bearish candle, very heavy bearish candle, in a manner that the closing of the candle is below the moving average, the same moving average that was earlier helping the S&P 500 to hold, sustain and to move up. That is why in my previous S&P 500 weekly technical analysis, I have repeatedly mentioned that because of this particular case where the S&P 500 is weak, it is weak, but because it has sustained and closed above the moving average, two consecutive closing, this means that it will get bullish support, the bullish support. So now in this case, what you can see, that this heavy bearish candle has closed below the moving average. Okay, so first of all, the candle itself is so heavy that there are heavy bearish sentiments, and the same can be seen through the candle that was formed yesterday on Friday. For after 3 hours, after 3 or 4 hours, there was no improvement, no significant improvement in the market. Market was under very heavy bearish pressure. It kept on coming down, 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 and a very little retrace. Okay, so heavy bearish pressure. What does this indicate? This indicates a gap down open, on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, and also not just on Monday but also Tuesday, Wednesday or so, the market will remain under pressure and it will remain weak. Now let's confirm the same through the Dow Jones. This is the Dow Jones. This is the last weekly candle of the Dow Jones, exactly the same. Okay, the same thing, heavy bearish candle, and also the closing of the candle is seen below the moving average. Okay, now unlike the last week or last to last week where there was a disconnect between S&P 500 and the Dow Jones, because in the week of March 10th, the Dow Jones closed below the moving average on the weekly basis, but S&P 500 closed above. Okay, then in the previous week, both of the indices closed above the moving average. That is why there was the bullish retrace. Now in the recent week, yesterday, both of these, the Dow Jones and the S&P 500, has closed below the moving average. That is why, okay, the same bearishness on Monday, a gap down open, or irrespective of any open and initial or intraday bearish movement, okay, not just on Monday but Tuesday, Wednesday or so, and we will see pressure in the coming days or weeks. So now it is clear that the market is under pressure. Okay, and this time both of these, S&P 500 and Dow Jones, okay, are aligned in the same direction, the bearish direction. Closings of the candles, weekly candles, are below the moving average. More bearish movement is coming. Now let me show you one pattern, okay, a pattern that will help you understand why I am using the word recession. Okay, recession. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far if you have liked this video, then hit like to appreciate. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now for this, the recession or this scenario, you need to understand that the S&P 500 has recently given up, okay, by 10.5%, right? Whereas in the last year, okay, in the month of July and then until the first week of August, S&P 500 gave up only 9.8%. 9.8%, and it did not breach the 10% mark. So now if you notice that 9.8%, 10.5%, okay, it seems like that there is not much difference. Yes, it's true that there is not much difference, 9.8%, 10.5%. However, the most important part is 10%. Okay, this number 10. Number 10 is very, very important here, because whenever an index, I am talking about an index especially, okay, the same happens in the stocks also, but whenever an index loses more than 10%, okay, then it enters into the correction. Okay, by default it enters into the correction. That is why if in the month of August or early August, if there would have been a little more fall, and if the S&P 500 would have breached 10% mark, then we would have seen a correction, okay, in August, September, October itself, around 20% correction. Okay, and that correction would have been healthy, because at that time the conditions for the recession were not there. Okay, there was something like correction or a little more than correction, but not the recession. Okay, somewhere between correction and recession was there. But after, however, S&P 500 did not breach the 10% mark, it recovered and it kept on moving up, up and up. And then it becomes so heavy that it hit the expected peak that I started to mention from October 2024. The 614x will be the all-time high. Okay, and the S&P 500 hit the 614x on 19th of February. Okay, so that is why this 10% mark is very, very significant. Now you might want to ask one question, that at the same time the Nasdaq actually breached the 10% mark. Yes, that is why the market was coming down. That is why the S&P 500 was coming down. But because S&P 500 did not breach the 10% mark, so that is why everything recovered. Okay, but it was not actually about the S&P 500 also. It was the Dow Jones, because the final call, okay, or the final decision will be made by the Dow Jones only. Okay, whether the market should enter into the correction or in the recession, it will be defined by the Dow Jones, not the Nasdaq or the S&P 500. Nasdaq act as an early indicator, to what is going to happen next in the entire market. And if the same is also seen in the S&P 500, then it is kind of confirmed, like 90 or 95% confirmed that this is going to happen. Okay, because once the Dow Jones confirms or declares that there is a correction or recession, then there will be the correction or the recession, no matter what, no policy, nothing will work. Okay, in this case, now let me show you the Dow Jones. Now in case of the Dow Jones, okay, what you will notice is that the Dow Jones has lost only 9.85%. 9.85%, wherein S&P 500 lost 10.5% and the Nasdaq lost around 15%. Now, because the S&P 500 and Nasdaq has lost and have entered into the correction, whereas Dow Jones saved itself by just by 0.15%. It retraced before hitting or before breaching the 10% mark. Okay, but because the S&P 500 and Nasdaq, both of the indices have entered into the correction, this means that there are 95% chances that Dow Jones will also enter into the correction. And now, when the Dow Jones will enter into the correction, or when there will be more fall, so approximately 10% will be around 40,575. Yes, this means that once the Dow Jones breaches, let's say, okay, in simple words, 40,550, 40550. When the Dow Jones breaches, just a breach, I'm not talking about the closing or anything, just a breach of 40,550, then it will accelerate the fall. it will accelerate the fall in a manner that Nasdaq will be seen around 25% loss, 20 to 25%. Okay, and the S&P 500 will be somewhere, and the S&P 500 will be somewhere around 13%. Okay, 13% or so. But other than this, the most important part of that breach will be what? The most important part of that breach will be the recession. Okay, because when the market enters into all of the indices, S&P 500, Nasdaq, Dow Jones enters into this the correction, confirmed correction. Okay, then it opens the recession. Now there comes one more question, that if this thing has not happened, then why I am saying that the market has entered into the recession? Okay, again the same logic, because when you notice the movement, the fall, okay, now here in case of the Dow Jones also you will notice, okay, staircase kind of pattern, and it is expected to come down. Okay, other than that, in the recent times when the S&P 500 came down to 9.8%, came down by 9.8%, Nasdaq breached, Nasdaq was seen 14 or 15% down, the Dow Jones gave a very limited, this was July, okay, and then at that time the Dow Jones gave very limited 5% fall. But now that the Dow Jones has come down this much, and it is going to come down further, will enter into the correction. Okay, and based on the historical movement, it is now kind of confirmed that the market is already in the recession. It has already started the recession cycle. Okay, and the good thing is that this retrace will help us calculate the expected low, okay, for this cycle. Now let's talk about the technicals. Now in terms of the technicals, S&P 500 is bearish through the Bollinger Bands. S&P 500 is bearish, okay, not exactly neutral I will say, but bearish through the moving averages, although the moving averages have not given a clear fan out condition, fan out situation, okay, that is not there, but still the crossover has started to happen, so bearish. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is heavily bearish through the MACD. S&P 500 is heavily bearish through the stochastic RSI. It is neither over sold nor not saturated. Okay, and these are conditions. All of this indicates that the S&P 500 on the weekly chart is now 75% bearish. Earlier it was 60% bearish, but it is now 75% bearish. In case of the Dow Jones is almost the same situation, the same thing is there. Dow Jones is bearish through the moving averages on the weekly chart. Dow Jones is bearish through the Bollinger Bands on the weekly chart. Dow Jones is bullish through the Ichimoku cloud on the weekly chart. Dow Jones is bearish through the MACD. Dow Jones is bearish through the stochastic RSI on the weekly chart, neither oversold nor saturated. Okay, Dow Jones is also 75% bearish on the weekly chart. Okay, what does this mean, 75% bearish, or this much percentage bearish? This simply indicates, or it simply allows more fall, or indicates more fall in the market. So now we are waiting for 40,550. However, just around 40,600 there is my calculated heavy support level. Okay, and once the Dow Jones loses that support level, then what will happen? Then it will be confirmed that the Dow Jones is going to breach the 10% mark. The day it breaches the 10% mark, heavy fall, fall and fall. But guys, you need not to worry about the correction, recession, fall or anything, because through these daily precise updates, I keep my Patreon community members updated every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday. I give the pre-market analysis before the open of the stock market. Then I give the midday update after 3 hours. And through this, the midday update, I tell my Patreon community members what is going to happen for the rest of the day and what will the levels, zones, etc. Everything, just like pre-market analysis. Then I give the final update final update is given 1 or 2 hours before the closing of the stock market, and through the final update I predict the movement for the next day, including the open, gap up, open, gap down, open, and these things. So if you also want to get these daily precise updates every day, Monday through Friday, then you can join my Patreon community. And guys, other than these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, I also give the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market, top 30 or 40 companies of the US stock market. And other than that, every Wednesday or Thursday I give the mid-week update. This mid-week update, and I discuss this mid-week update is a video technical analysis, just like this weekly technical analysis. And here in this mid-week update, I discuss all of the numbers, levels, movement, tiebreakers, the technicals, the fall, the bullish movement, everything precisely. So guys, whenever you want to join my Patreon community in order to get these daily precise updates and the stock market opportunities and the midday and the midweek update, then I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says see membership options. And when you click on this button, then it will show you the membership levels, membership tiers, level 1, level 2, and level 3. Now these two levels or these two tiers are same. The only difference is the geographical location. So when you subscribe to either of these two levels or either of these two tiers, then you will be getting all midweek update videos, the same videos which are published every Wednesday or Thursday with detailed information of levels, zones, okay, precise movement, everything. Then the daily SP500 analysis, updates, precise updates, movement, levels, and zones. And the stock market opportunities minimum 5 to 10 every week. And this level 3 or this tier 3 is very special because whatever you are going to get here, by default you will get everything here, all midweek update videos, daily SP500 analysis, precise updates, movement, levels and zones, stock market opportunities, everything. Other than these, I will give you one Zoom meeting. There will be a one-on-one Zoom video meeting of 2 to 3 hours. And in this Zoom video meeting, I will teach you these. Okay, what are these? Entry and exit secrets. I will tell you the entry and exit secrets, when to enter, when to exit, when to book maximum profits, okay, when to minimize the losses, etc., etc. All of these entry and exit secrets. Then I will give you one premium hack. Okay, now this hack is a hidden hack that you might not have seen or heard of. Okay, this hack works almost 100% of the times with almost 100% accuracy. Then I will give you one trading or options strategy. This strategy works almost 100% of the times with almost 100% accuracy. Then I will give you modified technical indicators. So guys, I have done a lot of research, and through that research I have modified my technical indicators, and now my technical indicators predict the change even before that change is seen or that change happens in the stock market. Okay, then I will share with you, or I will teach you the options premium calculator, that how to calculate the premium value of any option price, past, present, future. Okay, because 95 to 97% of the traders who are trading in the stock market, they do not know how to calculate the premium value of any option. But once you know how to calculate the options premium value, okay, using the calculator, then you can predict the value and you will feel more confident. So in this manner, this level 3 or tier 3 will give you much more what you can expect. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday. And they know what is happening, what is going to happen, what will happen. They are very well aware of everything. They know the levels, zones, everything very precisely. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda, and here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Now on this the daily chart, let's first discuss the candle. Now this is the last candle, okay, from yesterday on Friday. It's a heavy bearish candle, just like what we have seen on the weekly chart. Okay. However, this candle is more bearish as compared to the weekly bearish candle. Why? Because the S&P 500 remained or traded below 5,600 mark after breaching the 5,600 and failed to recover the 5,600. Around 3 or 4 hours, the S&P 500 was in this condition. This means that there were very few buyers, okay, but more sellers as compared to the buyers. That is why S&P 500 failed to recover. Okay, this means that because of this heavy bearish candle on Monday, we can anticipate a gap down open, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, this is through this the last candle. Now the last daily candle of the Dow Jones. So almost the similar thing that was seen here. Okay, and because of that, this is the heavy bearish candle and it failed to recover, and there were more sellers as compared to the buyers. On Monday, either there will be a gap down open, or irrespective of any open and initial or intraday bearish movement will be there. Okay, now this bearish movement, it will actually depend on the level. That level is here, the S&P 500. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far if you have liked this video, then hit like to appreciate. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now here in the S&P 500, that level will be 555X. Okay, this level will tell us whether the Dow Jones will hit the 10% mark, or if still there are some chances that it can get a bullish retrace. Okay, so this 555X will be an early indicator, right? Now let's talk about the technicals. So through the technicals, once again, okay, what you can see here, before the technicals, okay, this is the movement. This movement means second bearish leg. Okay, now the technical indicators, S&P 500 is bearish through the Bollinger Bands on the daily chart. S&P 500 is bearish through the Ichimoku cloud on the daily chart. S&P 500 is bearish through the moving averages on the daily chart, and there is a clear fan out in the moving averages. Okay, now comes the MACD. MACD is still holding bullish. This means S&P 500 is bullish through the MACD on the daily chart. S&P 500 is bearish through the stochastic RSI on the daily chart. Okay, and it is neither oversold nor saturated, nothing. This means that on the daily chart, the S&P 500 is not 80, it is 90% bearish. Now there is one very important thing, okay, that is helping, or that will help the S&P 500 to sustain or to try for some bullish retrace. But before that, let me analyze the technically analyze the Dow Jones. Dow Jones is bearish through the Bollinger Bands on the daily chart. Dow Jones is bearish through the Ichimoku cloud on the daily chart. Dow Jones is bearish through the moving averages on the daily chart. Dow Jones is bullish through the MACD on the daily chart. Dow Jones is bearish through the stochastic RSI on the daily chart. Neither oversold nor saturated. Dow Jones is also 90% bearish on the daily chart. So what does this means? Means that it is 90% bearish. The S&P 500 is 90% bearish on the daily chart. Dow Jones is 90% bearish on the daily chart, and S&P 500 is 75%, and the Dow Jones is 75% bearish on the weekly chart. What does this mean? This means that the market is bearish and is heavily bearish in a manner that any bullish retrace will be limited, restricted, and the fall will continue. Now, there is one thing actually that can help S&P 500 and the Dow Jones. Okay, it will be really very surprising. What is that? That is the MACD. MACD. Okay, because MACD is bullish. Okay, stochastic RSI is bearish. This means that the bearish pressure is not there through this combination. See, when I say bearish pressure, I mean the momentum, because generally the momentum is seen through the combination of the MACD and the stochastic RSI, and I've repeatedly mentioned this in my previous weekly technical analysis in last many months, years. Okay, so far the stochastic RSI is bearish, but MACD is not. Now, if there comes, I think we need two more red candles or a little green candle, but the second candle must be good red. Okay, means this kind of combination. Then there will be a confirmed crossover in the MACD of the S&P 500, and the same will happen in the Dow Jones. Then what will happen? Then in that case, MACD will be bearish, stochastic RSI will be bearish, and then this will bring bearish momentum. Okay, heavy bearish momentum in a manner that we will see gap down open fall, or even if there comes a gap up open, then also fall, or open equal to high condition, fall and fall. But what if this thing does not happen, and somehow, okay, let's say that the president says, okay, that he will defer the tariffs, okay, or something, okay, because the recent volatility or the fall, okay, is primarily because of the tariffs. Technically everything is bearish. Okay, so market is not going to get any technical support, but non-technically, if the president says something like this, that he will defer the tariffs, okay, for 1 month, 3 months, or for more months, then non-technically there will be some bullish sentiments in a manner that the MACD will remain bullish, and if there comes one or two good green candles, okay, not one but minimum two good green candles, then the stochastic RSI can also turn bullish. When the MACD will be bullish, stochastic RSI will be bullish, then this will bring bullish momentum, not bearish, bullish momentum, and then because of this bullish momentum there will be some good bullish retrace. But this bullish retrace will not be seen or considered as the change of trend or bullish trend. No, the trend will remain bearish, okay, through the daily charts, okay, and the heavy bearishness will be there, but there will be some relief, okay, and it will give you one more opportunity to short, okay, to sell on highs. So this will be the only thing. Now there is one more thing that you must understand, and it is very, very important, very important. Now this thing is on the weekly chart. So now on the weekly chart, it is now kind of clear that the moving averages are going to give an absolute or confirmed bearish crossover. And for now, there is nothing that can help the S&P 500 or the Dow Jones in that manner. However, if because of something, let's say the president says, okay, something on the tariff, something good, that he is going to defer the tariffs, okay, or something like, or some heavy manipulation, very heavy manipulation. So what I'm trying to say here, that if there comes heavy green candle, something like this candle, heavy bullish candle, heavy green candle, then what will happen? In that case, this crossover, which is expected to happen as early as in the next week, okay, first of all, this will not happen. Number two, the Dow Jones will not be able to hit or breach the 10% mark. Okay, remember the 5%, okay, special condition I mentioned. This 5% special condition can be triggered in that case. Okay, so but for that to happen, we need to wait for a minimum of 2 or 3 weekly candles. Okay, because why do we need 2 or 3 weekly candles? So you need to understand, so if you have subscribed to my YouTube channel for last many months or years, there is a concept of slip. Okay, what is this slip? Slip means that moving averages are about to give a bearish crossover, but if there comes two back-to-back good or heavy bullish candles, okay, then what will happen? In that case, the bearish crossover will not happen. Then these moving averages, red and green, will not give a bearish crossover. Rather, there will be a slip. One moving average will slip on the other. Okay, they will remain in the bullish trend. They will remain bullish. Okay, but there will be a slip. Now, why this slip is very important? Because whenever such a slip is seen, or whenever such a slip forms, then what happens? Then it indicates the continuation of the movement that was happening or that was seen earlier. What was the movement? Bullish movement. Okay, in that case, what will happen? In that case, the recession we are talking about, okay, it will be potentially or highly likely this recession will be out of the picture. Rather, there will be the correction. That will be the best case scenario. Correction or a little or somewhere between correction and recession, but not the recession. Okay, but also this correction will not happen immediately, but first it will move up. Okay, it will continue to move up for 2 or 3 weeks or 4 weeks, and then it will come down, and then it will enter into the correction cycle. Okay, so in this manner, the 5% rule of the Dow Jones that I have discussed in the weekly chart section, and if you have skipped that section, the weekly chart, then I will highly recommend you to watch that section, the 5% theory I mentioned there. However, guys, whether it will be a bullish movement or the bearish movement or the recession or whatever, okay, you need not to worry about that, because the recession or the bullish movement, okay, or the long-term bullish movement, okay, this is nothing new. Okay, it has happened earlier a lot of times. It is happening and it will happen. But as long as you know the levels, zones, technicals, movement, everything, then you can play safe, you can trade safely, okay, without any problem. And for that, I have this program. This is S&P 500 Knowledge Transfer Program. Now, in short, whatever I know, okay, and whatever I've learned in these years, okay, through my research and everything, okay, I will share everything through this program, through this S&P 500 Knowledge Transfer Program. So I will share everything from the basics of the stock market, how the stock market works, okay. Then the modified technical indicators. I will share the modified technical indicators so that you can predict the movement even before it is seen in the stock market. Then I will share with you the trading strategies. Although you might see these the trading strategies, or you might find these trading strategies everywhere, but the way I use these the trading strategies, or the way I will tell you, it will be entirely different. Then I will tell you where to get the information. The information, stock market is all about the information. Then I will share with you the strategies, the options calculation, the options strategies, and the options premium calculator, and the live calculations through the options premium calculator. Then I will share with you the support and resistance levels for next 5 years. And then I will tell you that how to predict the price. Just like recently I predicted the 614x will be the peak, the all-time high. Okay, so how to predict, okay, these are prices through these small time frames, etc. Okay, price prediction. Then the trend analysis, how to analyze the trend, how to avoid getting into the trap, when to enter, when to exit, etc., how to recognize the manipulation and all of these things. Then I will share with you the hacks, the intraday hacks, short-term hacks, the long-term hacks. And these hacks works almost 100% of the times with almost 100% accuracy. And in this Google spreadsheet, you will find my email address. You will see that, and whenever you want to participate, you can simply send me an email. These are the general or these are the basic terms and conditions. And again, my email address, and these are the snapshots of the meetings. So guys, I have mentioned my email address here in this Google spreadsheet, and I have shared the link to this Google spreadsheet in the description of the video and also in the comment section. However, guys, if you only want to learn the hacks and the modified technicals, okay, or the options trading strategies, premium calculator, okay, then you can participate in these the programs. You can buy the products, okay, and you will find all of these products in the shop section on my Patreon page, my Patreon profile. So I've given the link to my Patreon page or my Patreon profile in the description of the video and also in the comment section. You can open the programs and you can learn more about the programs, and my email address is there. You can simply send me an email if you have any question, or you can buy directly from here, okay, and you can participate, and then I will schedule the one-on-one Zoom meeting, the Zoom video meeting, and I will teach you, I will share with you whatever I know. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. Now here until Friday, next Friday, so Friday will be April 4th, okay, there is nothing that is important in terms of the news data, okay, or the earnings also. But on Friday, on April 4th, the non-farm payroll data and the unemployment data will be released. So just like yesterday on Friday, on 28th of March, we have seen heavy volatility. The same heavy volatility can be anticipated on Friday. Other than the non-farm payroll or this data, on the same day after the market comes into the session, the Fed chairman is going to speak. So this means that on Friday there will be very heavy volatility because of these three factors: non-farm payroll, unemployment, and the Federal Reserve chairman himself. So now what we have seen is that the S&P 500 came into the bearish breakout condition. And in my pre-market analysis before the open of the stock market yesterday on Friday, I mentioned the bearish breakout condition in the bearish trend is very heavy bearish pressure. So this means that S&P 500 is now allowed to give up 3% to 5%, and this is the general rule of the breakout. Whenever the breakout happens in the bullish or bearish, okay, doesn't matter whether it is an index or the stock or whatever, but breakout means 3 to 5%. Sometimes, okay, it goes to 10% also, but because we are talking about the index here, that is why 3% to 5%. And if you notice, yesterday it has lost around 2%, the S&P 500, okay, so it is already there, 3% to 5%, okay. So what does all of this mean? So what does all of this indicate, 3% to 5%? So guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far if you have liked this video, then hit like to appreciate. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So this 3% to 5% means, for now S&P 500 is coming down to 555x level, okay. Now if the S&P 500 sustains at this level, okay, although chances are not good because it is already under pressure, bearish breakout is there, okay. But if because of the Dow Jones, not because of the S&P 500 itself, but because of the Dow Jones, if the S&P 500 sustains at this level, then intraday it can get a reversal. Reversal to what? Reversal to a maximum of 564x. maximum. Okay, it will struggle and then it will fail. Why it is expected to get a reversal back to 564x? Because yesterday it came down, breached 564x and did not spend some good time. Good time means it should spend at least minimum of 2 hours, okay, at or around 4x. It did not do that. This means that whenever it gets a bullish wood trace, then the bullish wood trace will be maximum to 564x. So it is something like when it was coming down, then on Monday, on March 10th, it breached the 564x. Okay, it did not spend good time at or around the 564x. Next day, okay, it did not test the 564x, rather it came down. Next day it tried to move up, then next day it came down, but next to next day it moved up and actually came near to the 564x. So this means that it can happen on Monday or maybe on Tuesday, but whenever there will be a bullish root trace, this bullish root trace will be limited to the 564x. Okay, then the 564x will tell us whether the S&P 500 has any more room in the bullish side or not. Because from the 564x it is expected to come down, and it is expected to come down heavily. But here I am talking about the 555x. Okay, that once the S&P 500 sustains at 555x. Now, sustained movement means it may happen that on Monday it can lose the 555x, it closes below 555x, but on Tuesday it recovers and closes above 555x. Okay, then in that case it will open the 564x, right? So in this manner also it will work. It is fairly allowed, that an intraday breach is allowed. It can fairly happen. Okay, there is no problem, no such problem. Okay, so it can happen, it can come down. Once S&P 500 loses the 555x, then what will happen? Then it will be coming down to the recent low, that was 550465, 5504.65. Okay, and just below this there comes a psychological mark 5500. Okay, just like 5000 or 6000, this 5500 is a psychological mark. Okay, what does this mean? That for now S&P 500 is allowed to come down to 5500. Things or the situation will not deteriorate. Okay, deteriorate means will not deteriorate for the Dow Jones, not for the S&P 500, the Dow Jones, because Dow Jones has come down. Okay, and the low was 40662, 40662. Okay, because if the S&P 500 comes down and breaches the 5500, then there will be more fall in a manner that Dow Jones will be forced and will be compelled to lose this low, and also the 4550, although it is not an exact mark, okay, for the 10% fall. And when this 10%, when the Dow Jones breaches the 10%, it will officially enter into the correction, which so far Dow Jones was reluctant to enter into. When it will enter into the correction, Nasdaq will heavily moving into the recession, and S&P 500 will be moving to 20% target. Okay, so that is why this 5500 psychological mark is very important for the S&P 500, for the Dow Jones, especially for the Dow Jones. Once there comes a breach of 5500 mark, then what will happen? Then S&P 500 will be ready for 53xx, around 5360 or 70 is the 38.2% of the fib retracement level. Okay, so it will be ready for that level, and then in the coming weeks or in next 1 to 2 weeks it will be coming down to this level. But yes, there is one more thing. Okay, there may come there may be a trap. There may be a trap. What trap? See, trap means S&P 500 comes down, okay, loses 5500, intraday there comes a breach of 5500, but before the closing it recovers and closes above 5500. Okay, and just above 5500 there is my calculated level. It also closes above my calculated level. That will indicate that the market is bearish and is under heavy pressure, no doubt about that. But the market is reluctant is reluctant to lose and to enter into 53xx. Okay, if there comes second closing also in the same manner, then there will be a bullish retrace. Bullish retrace to what? Bullish retrace to 564x. However, if the S&P 500 comes down, closes below 5500 psychological mark, okay, then by default it will be closing below my calculated level. Okay, there comes one closing. This will almost confirm that market is coming down heavy and S&P 500 is moving towards 53xx. Fine. But this is exactly where there will be a trap, because we need two consecutive closings below 5500 level, so that it can be confirmed that it is not a trap, and any bullish retrace will now be limited to the 555x itself, and then there will be the continuation of the fall and it will be coming down to 53xx. So when the S&P 500 came down from the all-time high on February 19th, then it came down and it lost approximately 10.50%. Now in the second leg, when it comes down, then it will be coming down from here, the high that is made on 25th of March, it will be coming down, and then the 10%, around 10% will be it will be in the 5200. Okay, but before that, because 38.2% is there in 5300 or so 7.5% we can say 7.5% fall in the second leg, of the bearish movement. In the first leg it was 10%, and that was fine, because of this, the 10% in the first leg, okay, we came to know that it is actually going to lose more. There will be a limited bullish retrace and it is going to lose more than second. Then after completing the second leg, there will be again a bullish retrace, and then the next leg, the third leg, this pattern will continue. This is a staircase pattern. I have repeatedly mentioned, if you have subscribed to my YouTube channel for last many months. Okay, I've repeatedly mentioned that there will be a staircase pattern. Bullish side, it was like this, came down, then this, then came down, then this. That was in the bullish side. Okay, earlier the market was moving up, it was ascending. Okay, now market is coming down, it is descending. And the good thing is that this descending pattern is absolutely natural and normal. It is not like what we have seen in 2020, February, March 2020, when there were heavy fall. There was very heavy fall. S&P 500 lost close to 50%. Okay, that is why we consider that part as a brief recession that was there only for 3 months or so, 2 or 3 months or so. But this time, this recession will be a normal recession, okay, that will be there for more than a year or 15 months or so. Okay, once in this staircase pattern, it completes its bearish cycle. Okay, so again, just like what I predicted, that here that 614x will be the all-time high, okay, for the S&P 500, and I started to mention 614x since October 2024. Okay, and you can watch the technical analysis from October 2024 onwards, and you will find, and you will see that I kept on mentioning this, the level. Okay, similarly, when it comes down to the level, that will be the expected low. Okay, I will tell you, okay, at least 4 to 6 months in advance that it is coming down, and this will be the level, expected low. And once it comes down, tests, then that will be the low, and from there it will get a bullish retrace, and then it will come out from this, the recession. Now what we know is that in this, the bearish breakout condition, only one closing was sufficient. One of my Patreon community members have also asked me the same question, so I mentioned that this breakout is happening in the bearish trend. That is why one closing is more than sufficient. Okay, and then fall and continuation of the fall. So 564x in the bull side, and then at this 564x it is expected to fail. Okay, there will be limited chances, there will be chances, but the chances will be limited. And for a movement beyond 564x to happen, the Dow Jones must help the S&P 500. Then only chances for the zone. What zone? The same zone, okay, that starts from 571x. Okay, but because it has failed once, then secondly it will fail. Okay, highly likely it will fail. So this means that it will fail at 564x. Even if it is able to move above 564x, then also it can move up to a maximum of 571x, the zone that starts from 571x. And this time it won't be able to move beyond 571x zone. It will fail at the zone. This means that the failure is inevitable. Okay. Whereas in the bearish side, what we know is that initial indicator will be 555x. Okay. And then the 5500, which is the psychological mark. Okay. Two closings below 5500 confirms that Dow Jones won't be able to hold, sustain. Dow Jones will breach the 10% mark, will officially enter into the correction, heavy correction, and Dow Jones will then, not Dow Jones, it will be the Nasdaq. Nasdaq will then start to lose heavily. Okay, when Dow Jones breaches the 10% mark, the fall will be balanced in the S&P 500, not heavy, okay, not slow, but it will be balanced in the S&P 500. In this manner, and when there comes two consecutive closings below 5,500, then 38.2% of the fib retracement level, and that will be around 5360 or 70, somewhere around there. Okay, when it comes down, then I will share that number, 38.2%. But guys, you need not to worry about this correction, recession, or the fall or anything. Okay, you can join my Patreon community, because here in my Patreon community I give the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market. And I share the exact numbers, levels for the fall, for the rise, everything in detail. And knowing the movement, levels, numbers, you can trade confidently without worrying about the correction, fall, recession, bullish movement, bullish retrace, bearish fall, intraday fall, or anything. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And guys, once again, hit like if you have liked this video in order to appreciate my work. And once again, this is my knowledge transfer program, S&P 500 knowledge transfer program. And I've given the link to this Google spreadsheet in the description of the video and also in the comment section. And the most important part of this knowledge transfer program is that once you participate in this knowledge transfer program, then you will become self-reliant in a manner that for the years to come, you can trade confidently all by yourself. Because whatever I know, I share everything, okay, through this S&P 500 knowledge transfer program. So this is my email address. This is my email address that is mentioned in this Google spreadsheet. And the link to this Google spreadsheet is there in the description of the video and also in the comment section. And you can also visit my Patreon page, my Patreon profile, where I mention all of these programs, the hacks, the options trading strategies, premium calculator. And you will find all of these products here in the shop section.